Okay, let's just jump right in. It is Thursday morning, February 5th, 2026. And if you were watching the markets at all, you probably saw something that made you look twice.
I definitely did. I had to refresh my screen. Thought it was glitched for a second.
Right. We're talking about Hershey, ticker HSY. The chocolate company. They just dropped their Q4 2025 earnings, and the reaction is, well, it's huge. The stock's up over 8% in extended trading as we're talking.
Which is, just to set the stage, a massive move for a company like this. These are supposed to be the slow and steady stocks, not the ones that leap 8% overnight.
Exactly. And that's really the big mystery we're digging into today.
Yeah.
Because the story for the last year, maybe 2 years, has been all about one thing. Unprecedented cocoa inflation.
Oh, yeah. That was the headline that just would not go away. Cocoa prices were at historic highs. It was getting insanely expensive just to make a simple chocolate bar.
And that's before you get into the tariff issues and all the trade
It
volatility.
was a perfect storm, really.
So you've got this iconic candy company. Their main ingredient is costing them a fortune, and everyone expects them to be, limping into 2026. But instead, they come out with this report that has investors just cheering. How? Did everyone just start eating twice as much chocolate?
You'd think so, but no, that's not what happened. And that's why this is so interesting. When you actually read the prepared remarks and the earnings call transcript from this morning, which we've done,
Well, yeah.
you realize this isn't just about financials. It's a huge strategic pivot. It's a story that involves, of all things, salty snacks, Shaquille O'Neal, and a cost-cutting plan that basically saved their year.
Salty snacks and Shaq. I did not have that on my bingo card for Hershey in 2026.
It's a wild combination.
So what's really going on here? Is Hershey even a chocolate company anymore? Let's get into it.
Let's do it.
Okay, first things first, the numbers. We know they beat expectations, but was this a real, genuine win or just, not failing as badly as people thought?
Oh, it was a genuine, significant beat. Wall Street was looking for an EPS, an earnings per share, of about $1.40. Hershey came in at $1.71 entry.
That's a huge beat. 31 cents is a wide, wide margin in the earnings world.
It is. And then on revenue, the top line, they hit $3.09 billion. That was over $124 million more than expected.
Wow. Okay, so people were definitely buying. But how does that square with the cocoa crisis? I mean, the CEO, Kirk Tanner, he led with that. He didn't hide from it.
No, he couldn't. It defined their entire year. And you can see the damage in the report if you look. The inflation absolutely bit them, and hard.
I was looking at the gross margin numbers. They took a nosedive, right?
A complete nosedive. Adjusted gross margin dropped by 650 basis points in Q4.
Okay, let's just pause on that. 650 basis points. In plain English, that's 6.5%, correct?
Exactly.
So for every dollar of candy they sold, they were making 6.5 cents less in profit just because of costs.
That's the perfect way to put it. And in that world, a 6.5% margin hit is a catastrophe. On top of that, they mentioned a $30 million tariff expense just in that one quarter.
So wait a second. I'm trying to follow the math here. Their costs went through the roof, their profit margin collapsed, but they still crushed earnings and the stock is flying. How does that work?
It feels like magic, right? But it's two things. First, even with the margin hit, net sales were still up 7%. People kept buying.
So volume was there.
Volume was there. The CEO used this phrase that consumers are spending selectively.
I feel that. I might skip the big vacation, but I'm still buying my snacks.
Totally. But that alone doesn't fix a 6.5% hole in your margin. The real secret weapon, and this is what the market is so excited about, is something they call the AAA program.
The AAA program. Sounds like they needed a tow truck for their profits.
I mean, in a way it was. It's their big efficiency initiative. It's basically a corporate name for some really aggressive cost cutting.
Just tightening the belt.
Drastically. This program saved them over $300 million in the last 2 years.
$300 million. Okay, that's not just turning off the lights in the factory. That's a fundamental change.
It's huge. And they're projecting another $100 million in savings for 2026. So think of it this way. Cocoa prices were just eating their profits alive, so they were cutting costs on the other side of the ledger just to stay afloat. That's how they funded the beat.
Control what you can control. Classic.
Precisely. And all that discipline gave them the room to focus on the part of their business that is just on fire right now. And it's not chocolate.
Right. This is the part that I think really surprised people. You think Hershey, you think a chocolate bar. But the star of the show in Q4 was North America Salty Snacks.
This is the pivot. The numbers here are just staggering. Net sales for salty snacks in the fourth quarter were up 28%.
28%.
Yeah.
In the food business, Companies fight for 2 or 3% growth. 28% that's a tech number.
It's incredible. And even if you strip out the acquisitions, the organic growth was still over 18%. This is real.
So what's driving it? Is it just pretzels?
Well, yeah, actually, Dot's Pretzels is still a monster for them. It was up 21%.
I have to admit, I'm part of that statistic. Dots just sort of appeared a few years ago, and now they are everywhere.
It was a brilliant acquisition. But it's not just Dots. Skinny Pop was up 8%.
The classic, I feel guilty, but I still want popcorn choice.
Exactly. And they mentioned something really specific in the call. A lot of that growth is coming from variety packs.
Oh, but that makes total sense. You're at a big box store, you grab the giant box for the kids' lunches. It's a value play.
It is. But they also went shopping again. We need to talk about LesserEvil.
The popcorn with the little guru on it?
That's the one. They bought them in November, and that brand is all about better-for-you snacking. Organic, clean labels, healthy oils.
So I'm seeing this strategy here. It's a hedge, isn't it?
100%.
If I want sugar, they have Reese's. If I want a salty, savory crunch, they have Dots. And if I'm trying to be healthy, now they've got LesserEvil. They get my dollar no matter what mood I'm in.
That is portfolio diversification in a nutshell. They're building what is now the third largest salty snack portfolio in the country, specifically to insulate themselves from, the next cocoa crisis.
It totally de-risks the company. A spike in cocoa prices doesn't matter for a bag of popcorn.
Exactly. And investors love that. It shows they're not just a sitting duck. They're building a lifeboat out of pretzels.
But it's not like they're giving up on candy.
Right.
In fact, they seem to be doubling down on what they called emotional value.
Yeah, I saw that phrase too. It's a very corporate way of saying this stuff is fun and makes you happy.
Which, in a stressful economy, is a real selling point. People want a little treat.
And they're leaning into that with some pretty wild new products.
We have to talk about the Shack gummies.
We absolutely do.
So they're launching Shackalicious Slams.
It's a lot to say.
I love it. Shackalicious Slams. It's a multi-texture gummy. I mean, why Shack? What's the play here?
It's about cutting through the noise. How do you get noticed in a crowded candy aisle? You partner with someone huge and loud and universally liked. Shack creates a moment on the shelf.
It's pure attention. And they're doing the same thing with the Reese's Oreo mashup.
That just feels like a cheat code.
How does that not sell?
Yeah.
You take the two most loved things in the snack aisle and put them together.
Well, the report says it's crushing expectations. They're actually having to increase production capacity just to keep up.
And then there's the Jolly Rancher Heat Wave for the bold and adventurous palates.
Spicy candy. It's a real trend, especially with younger consumers.
But behind all this fun stuff, there's a really important financial reason why it all works.
The price point. This was maybe the most important stat in the whole report. 75% of Hershey's entire portfolio sells for under $4.
That's the whole game right there. Under $4.
It's everything. You might not buy a new car, you might not go on vacation, but you can almost always find $4 for a treat. It's an affordable luxury.
It's the lipstick effect. When times are tough, people buy small indulgences.
Exactly. That price point is their fortress. It protects their sales volume.
Okay, so let's put it all together and look forward. They survived 2025 with cost cuts. They pivoted to salty snacks. Now what? Management is calling 2026 an inflection point.
That's strong language for an earnings call. They are very bullish.
So what's the promise?
They're forecasting 4 or 5% sales growth, but the big one, the one the market cares about, is margin recovery. They are targeting a gross margin recovery of 400 basis points.
Whoa. So they lost 650 basis points, and now they expect to get 400 of them back in 1 year. That's a V-shaped recovery.
It is massive. They're saying the worst of the cocoa shop is over, and now all those savings from the AAA program will finally hit the bottom line.
But they're not just saving the money. They're planning a marketing blitz.
A huge one. Double-digit increases in media spending.
And it starts like this weekend. They're targeting 10 huge cultural moments, starting with the Olympics, then Valentine's, March Madness, Easter. They're going to be everywhere.
But here's the craziest stat of all. The CEO said that right now in Q1, they are launching new media campaigns for the core Reese's and Hershey's brands, and that these are the first new campaigns for those brands in 8 years.
Hold on, say that again. Reese's and Hershey's bars haven't had a new ad campaign launch in 8 years.
That's what the transcript says. The first such launches in 8 years.
That is unbelievable. I feel like I see their ads all the time.
Probably running the same creative or just relying on the fact that, everyone on Earth knows what a Reese's cup is. But this is a major shift. They're going on offense.
It's like they're waking up. Okay, crisis over. We're lean. Now let's go remind everyone we're still the king.
And they have to. Because there are still risks. They were pretty open about that.
Right, the price elasticity. Basically, will people stop buying if prices go up more?
Exactly. And the CFO was cautious about 2026. He also specifically called out the weight loss drugs.
GLP-1s. They listed Ozempic and Wegovy as a potential headwind.
Yep.
Increasing GLP-1 adoption and evolving health and wellness trends. It's a new reality for them. If a chunk of the population just doesn't crave sugar as much, that's a long-term problem.
Which brings it all back to the salty snacks and the better-for-you popcorn. It's not just a hedge against cocoa prices.
No, it's a hedge against the new health trends, too. You stop buying chocolate bars, maybe you'll buy their Skinny Pop instead. They want to stay in your pantry one way or another.
So let's sum it all up. What's the playbook for Hershey right now?
2025 was survival mode. They took a beating on cost but got incredibly lean and efficient, all while their salty snack business just exploded.
Right. And now in 2026, they're taking all those savings and pouring them into a massive marketing push to get our attention back and restore those profit margins.
That's the plan. Restore margins, spend big on marketing, and keep diversifying away from a total reliance on cocoa.
It's a bold plan. But that 8% stock jump says the market believes in it.
The market loves a margin recovery story, for sure. But before we go, I want to leave our listeners with a question. We all think of Hershey as the chocolate company, but with salty snacks growing at almost 30% and cocoa being so volatile, at what point do they stop being a chocolate company that sells snacks and become a snack giant that just happens to sell candy?
It's a great question. The center of gravity in that company is definitely shifting, maybe faster than we think.
Something to chew on. That's all for this deep dive. Thanks for listening.
Thanks, everyone.